Welcome everybody to a new Smart Society YouTube video. My name is Chapito, and this week we'll have something different for you than our normal investing series. We're gonna talk about some crazy movement that just happened in the Solana NFT space, and this is Yawww announcing their launch of the Solana NFT marketplace with 0 fees. So a lot of people are angry about this, a lot of people like it. We're gonna talk with you about the benefits, how this could actually potentially hurt the Solana NFT space as well, and how you can benefit from this as a trader. So how does it work? Well, you see that there's already some listings on Yawww, and if we go to OKBears, for instance, and we click on one, you'll see here that you have a 0% platform fee and a 0% chosen creator fee. So what does this mean? It means that if you buy this OKBear for 96 Sol and you sell it for 97 on the Yawww afterwards, you'll have a 1 Sol profit, and that's totally for you. So nothing goes to the creators, nothing goes to the marketplace as well. So this means that you can set your own creator fees. So if you want to give like 2% or 3% still to the project, which I don't think a lot of people are going to do, but you can do that, and you can also set your own platform fee. And I'll tell you how this works. If you go to marketplace and subscriptions, you actually see you can have a subscription on Yawww. And normally if you don't have a subscription, you will pay a 3% fee into Yawww. But if you do decide to go for the 0% marketplace fee, you will have to pay 1 Yawww per 7 days. Well, 1 Yawww is right now about $0.05. So that's not a lot. So for 7 days, that's a good fee. And that will already mean that you have 0% marketplace fees. So what will this mean for the total NFT market? Let's go to Twitter for a second and let's see what Yawww has to say about this. This is their thread, and they said, from my point of view, there's only been 3 winners in the past 9 months. Magic Eden, venture capitalist, NFT projects with high royalties. And this is true, especially in the bear market. A lot of people are losing money, and that 10% extra that goes off your profit might actually be a reason why a lot of investors are going out of the space, or maybe investors that are hesitant to even enter the space. So let's talk about how everybody's feeling about this, and I'll also give you our point of view. And we're gonna look at the Benny Brainless thread. He made a thread and I thought it was quite interesting. So let's look at what he has to say. He says, this was inevitable. In an open market, there's no sustainable future where everyday people voluntarily choose to miss out on 5 to 15% of potential profit. It's also completely unrealistic to assume that a mature market could operate with these outrageous royalty fees. And I agree with this. Like, even in a bear market, it's especially true. If you're buying an NFT and you want to sell it right afterwards for the same floor price, you're losing money. So this means that the NFT has to go up in value like 10 or 15% first, and then you're only at break even. So obviously this is going to discourage a lot of people to even make certain trades, especially on the higher floor price regions. So yeah, it's inevitable that somebody would do something at this point. For instance, we're here at our AI signals, and if you're a holder of a SmartC NFT, then you know that you can access these. And there's not been a lot of AI signals because of the bear market, but you see that the signals that have been there are almost all in the green. But some of these profits, like for instance these ones, they have 12% profit, which is nice obviously. But if you deduct actually the royalty fees from that, you're at break even. So obviously this is not a good trade, and obviously you want to be making money like with the 47%, 54%, 200% trades. So let's go back to the Benny Brainless thread and let's see what kind of consequences this could actually have for the overall market. He says, worst case, we face a tragedy of the commons. Tragedy of the commons is a problem in economics that occurs when individuals neglect the well-being of society in the pursuit of personal gain. This leads to everybody's detriment. What he means by this is maybe at short term, more investors will enter the space, more people will invest their money, so there's more liquidity into the space, and that's actually what we need in a bear market like this. But another side of it is that maybe some collections or some projects are not going to be able to enter the market, or they don't want to because there's not enough benefit for them. Especially if you have a low mint surprise, or if you're a DJ mint, for instance, they are really depending on the royalty fees from the secondary market. So if this is washed away by Yawww, obviously this is going to be a big barrier for people to even start their project. And if no one is starting a project, then you know what's going to happen to the market, and that's not going to be beautiful. But let's look at the best case scenario Benny Brainless is describing here. He says this is the kick in the butt the space needs to reach real maturity. No more pump and dump schemes, no more DGen mints, no more thousands of useless projects hyped, promoted and forgotten. Instead we see a new area of legitimate projects and companies come forward. And this is where our take is as well. Obviously DGen mints are nice and it's funny to be talking about them on Twitter, to be trading on them and maybe make some instant profits. But a lot of times these projects don't have a roadmap, they don't have a Discord even, and they don't have a lot of time spent on the project. And if we really want this space to be continuing for the next coming years, and we don't just want it to be a bubble like everybody else is saying, then we need really good projects with a solid backing, with capital in front, with a good team and also a good roadmap, and we only want them to enter the space. And this is what it will do, because if you don't have royalty fees, you gotta be raising a lot of mint funds. And nobody will mint if you don't have already something set up or don't already have a lot of community backing. So you really need to put that effort before. So yes, for people that don't have a lot of funds yet, it's gonna be hard for them to enter the market. They cannot just launch and then afterwards they start building with the capital they gain from royalty fees. But what does it mean? It gives more urge to founders to actually make something in front already, start building before. And if you don't have the capital, you could raise it if you have a solid plan and if you're a solid business owner. Obviously, there is the argument of why do you think devs are gonna continue building if they don't get constant cash flow from royalty fees? And this is nonsense. I mean, you know that NFTs are kind of a crowdfunding. So you build something, you have a prototype, and you're gonna launch it to the public and you're saying, if you invest in me, I'm gonna build this for you. So the investments you get initially from the mint fund should already be enough to build this for your holders. You don't need the royalty fees to actually accomplish this. So what will this mean for you if you're a trader? Well, we just saw the AI signals and we see that everything that's in the green will be instant profit for you. And even if you're looking at our collections inside, which we use a lot to find pumps early, you only need like small pumps to already make a profit. And you don't need to worry about the royalty fees that are cut off from your profit. So it's really interesting for you as an investor and it's really something that you should be happy about. Another thing that's good for you as an investor and which might be an opportunity is to look into the Yawww token. I've accumulated some already because if this is really going to be big, you really want to have those Yawww tokens while they were cheap. Obviously, this is not financial advice because you'd never know if this is really going to be the next big thing or if Magic Eden is going to stay king of the hill. Because if we look at Yawww, we see that it's quite a nice site. The UX is quite good, the UI as well, but it doesn't have the features like Magic Eden has. It doesn't have the bulk listing, the bulk buying and stuff like that. And Magic Eden is just a way bigger team and a way more advanced team if you ask me. So in my opinion, I think it's going to be a tight battle because we saw this with OpenSea as well. People love Magic Eden. Obviously they made some mistakes in the past, but they're always learning, they're always transparent, and they're always building and giving new features to people on the platform. So with OpenSea, obviously everybody thought everybody was going to go there, but actually everybody was loyal to Magic Eden. Right now it's different though, because with Yawww, if you're switching to that, you actually make money as an investor because you don't pay those extra fees. So in our opinion, as founders of an NFT project, we think that this is a good movement. If we want the space to continue over the next years, we don't want people to give up 10% or 15% of their profits every time they trade. Obviously, it's going to be harder for new projects to raise the capital they need, but it's only going to urge them more to build better, to have a better team and to have a better roadmap already. For us, Smart Society is not going to change anything because, like I said, we've already secured the mint funds from the mint and we can continue building with that for a long time. So I urge other founders to do this as well. Secure your mint funds, don't spend it on stupid stuff, and make sure you actually can make those things for the holders that you promised. Let me know what you think about this movement in the comments. I'm really curious to hear what you think. Next week we'll be back with a normal investing series video and I'll see you there.